Hey guys, it's Tim, and it is 9:50 here on the last trading day of the year. I waited till the first hour of trading was done before shooting this video because I just kind of wanted to see how it would go. So this is going to be probably a little bit longer than I'd like it to be. I'd like it to be 10 minutes or less, but I want to get into quite a bit of detail here on what exactly is happening in each of these markets and what we maybe can expect moving into the new year, or at least how we're viewing it. So let's start with March corn. March corn is currently trading up 1.5, and I've got quite a bit of information here on this chart. Okay, so I want to break down, especially for those of you that are new, what exactly it is that we're looking at. First of all, this is a daily chart of March corn. Each bar represents one day. This is a candlestick chart formation. That's all that is. And then this squiggly line with the different colors on it, this is called our cloud, okay? And what it does is give us a glimpse of where support and resistance might come in, and gives you an idea of where the trend is. So really simple cloud analysis is: above the cloud, you're bullish; below it, you're bearish. Okay, real simple. Below, bearish only; above it, bullish only. And it's not there's no voodoo in here. There's no volume. It is solely determined by price action, which is what we like, okay? Because let's face it, these oscillators that we look at all the time, they're fun to look at and they're cool, and yes, they can give you some insight as to what's happening, but oscillators and volume do not put money in your account or take it out of your account. The only thing that does that is price, which is why we like to say price action is king, and we will let it be our guide. So here we are. I wish we would have taken this little move right here, because this move up really did trigger a nice buy signal, and in hindsight, it was pretty easy money to make. But we didn't take it because this was December 21. It was Christmas week, and we thought, well, we just don't want to get chopped up in light volume and in year-end stuff. So here we've been neutral to slightly short the market through this, and that doesn't sound like very much fun, and we certainly don't like it either. But here's why we're doing that. This whole move to the side has been a consolidation of something, okay? And I'm talking from August 29th through today. It's all a consolidation pattern for some kind of a move. We're either consolidating this up move from August, from the July low to the peak here, right in here. We're either consolidating that upward move, or this whole thing is a consolidation after this large decline here that we experienced from April, or from May all the way through July, okay? So it's really hard to determine what trend you're in this type of scenario, because it really can be either way. And that's not us being wishy-washy, that's us being realistic as to what the market is telling us, okay? Now, look at where we are exactly here. What this is a base channel, okay? And anything below this base channel we would view as very bearish. So we have 1 down, 2 up, 3 down, broke below the base channel, threw back to it, came back. Now we've traded back to the top side of it. A move back above this trend line is a significant move and something that we should pay attention to. But it's really this blue dotted line here that we want to pay the most attention to, which comes in at 692 March. And the reason that's so significant is because that's the price level from which the down move started. Okay, so this down move right here accelerated at that level. So this is where sellers emerged, and what we want to see is sellers emerge again below it. So if price were to break above the trend line, up out of its cloud, and above this 692 level, that has got to turn our attention back to something larger is unfolding that's unknown to the market, and up we go. Now, remember, this bar right here and today's price at 681.5 represents, let's call it 99.9% of all known information to the market. What lies ahead to the right is all unknown information. Supply and demand will ultimately rule the day, and higher supply and lower demand will result in lower prices. That's 100% guaranteed. And tighter supply and higher demand will result in higher prices, okay? This business is no more complicated than that. So we don't know what's going to unfold, but if the market moves back above this level, then it tells us that these higher targets come into play at 740, 760. So and notice that's just back to these peaks back here. If we get to that level and something bigger transpires, then we may be looking at something wholly unknown, but I'm guessing that by the time we get here, we'll know. But for today, I don't think we need to look any further beyond this level right in here. You've got an awful lot of consolidation. You're at the 61.8% retracement level. You're at a significant downtrend level right at the top of this base channel that must hold if the bearish count is to be true. And you're also at this critical inflection point of where the prior last move really accelerated to the downside. So anything below this level is bearish. Anything above it is bullish, and that's where we're going to pivot from, and that's how we're going to trade it, okay? For today, we've elected not to come in and trade. We'll see where we are at the close, but I think we just want to wait and see how we react to the market on Tuesday, and that's going to tell us everything we need to know about corn. On your shorter term charts, let me pull those back here. On your shorter term charts, you are starting to see some signs of weakness and divergence with this long kangaroo tail. And then if we do look at some of our oscillators, you're starting to see some divergence from the peaks here, which would be indicative of a short-term top being in place. And if we're able to trade back below 672 3/4, then that would accelerate a move lower in our opinion. Okay, so now that's March corn. I think March corn is what's really going to drive the day here. Let's take a quick look at December so you can see what it's doing. Really kind of trading along the same lines. Put our cloud on here so you can see where we are. December's weaker. We haven't even gotten back to the bottom side of our cloud yet. And we remain weakness. We continue to see weakness on this side of the market. So time will tell how well that unfolds. All right, now let's take a look at soybeans because they're the most rambunctious and probably have the most to talk about. This is March soybeans, and this entire move sideways we have been viewing as consolidation and corrective after this move to the downside. This move was very impulsive. It covered $15.72 all the way down to $13, so $2.75. And since then, we've now replaced almost 80% of it, right? And we've filled this little gap here in the middle, and we've held under this 1546 level. That to me is the most important level on this chart, is this high right here. Again, like the corn chart, this is where the price accelerated from. Okay, you can see the reversal and you can see it move lower. If we're able to trade back up above this level, then I think it pulls in much higher targets. And you got to draw those targets off of this low right here, which put us all the way up to the 1675 to the 1750 zone, which would be the 1.382 extension, the 38.2 extension of the 61.8 extension of the decay from this move down. Okay, so without getting overly boring on the Fibonacci numbers, that's just a pure Fibonacci target off of that move, and that would be something that the algorithms would be triggering. Now we got to break that first, so I think it's prudent to view it as bearish anywhere below that, particularly with the fundamentals that we have. We don't think that this move is consistent with what we know about the fundamentals yet. So I don't know why beans are moving higher other than potentially it's short covering of people that got caught short underneath here. Or maybe there's something larger unfolding in the market that we don't yet know about, and it will present itself as we work higher. That could be the drought, and the crop in Brazil is smaller than we think it is, or the demand coming from China is bigger than we think it is. But what we think we know today is that the crop in South America, if you add up Paraguay, Argentina, and Brazil, is roughly between 20 and 30 million metric tons larger this year than it was a year ago, which would put us with a bountiful amount of supply and easily able to meet demand as we know it. So in order to work higher from there, you've got to shock the market with something tighter. More demand or less supply. One of the two has got to happen. Otherwise, beans are going to roll over and put the bearish targets into effect, which are, let me take this off and redraw them off today's high, because you're going to draw those off of the decay of this move down. So this move down and then the retracement from it, you're going to draw that target right here, which puts targets all the way down to 1205 to 1148. So for today, the risk reward remains down. Okay, anything below here, this is a really good risk reward. So you want to maintain a short position into this. Even though I wish we'd have been resetting them today instead of holding them, but that's okay. The risk reward still favors that downside, and a move back above this changes the dynamic. Probably puts us to the sideline for a few days until we see how we trade up against this top, but certainly above that, what we call the magnet, which is just the equal to the highest close. Anything above that, we'd want to look higher. Anything below that, we'd want to look lower. So 1545, 1566. Those are our two magic levels that we want to see, and we want to see the market reverse from those and trade lower. Now, another thing that's got the market's attention here is November beans. If you notice, they're stronger than March. They've already traded above this level here that we view as critical. So March could do it. Like, we can't take that off the table, because November beans this is an amazing fact, they are the highest close for November soybeans, for new crop beans at the end of December in more than 30 years. And not by just a little bit, by more than $1 a bushel. So if you're looking to manage your risk, you have a greater than $1 a bushel head start on next November's beans than at any point in history over the last 30 years that you can count on. That's certainly longer than my history in trading, and it's longer than most of your histories as well. So this could be a gift horse, and you don't want to overlook it. You want to make sure that that is managed and ready to be sold accordingly. Okay, now look at these price points. Okay, this is the same thing. We could blow on up higher here, and if this works higher, then the relative retracement points off of this low right here are all the way up at 1530 to 1590. And remember, the old crop is up at 1760. So you still got a $2 a bushel spread there from old to new. And those targets are on the table for now until we see lower levels. So I would say that your best bet is to stay long this market for now and sell it a little bit lower, because you do have some upside. But if we start to see weakness and we see big exuberance to the downside in the March, then we're going to want to sell these beans here as well. And we may get into a short call, long put or something. I think yesterday, well, let me just pull these up, see what we can look at here. Pull up. Let's go to beans, CSEX23. So here's your November options chain. You can buy a 1340 put for 55, and you can sell a $15 call or a 1540 call for 47. So for 9 cents, you can build a position around old crop beans from 1540, which captures all the way up to this point, and set a floor right here at the bottom of all this congestion. You can do that for a dime or maybe even money, depending on where you put the position on, and you can set that and walk away and sleep at night and reward the market for what it seems to be giving us. But time will tell there, and I think this is the analysis that rules the day, which is anything below this 1545. Okay, now let's look at our good friend Kansas City wheat. I'm going to zoom out and make this a little bit bigger here. Kansas City wheat is still contained here within parallel lines. This is just a highly volatile market. It's really hard to trade it. The last 4 days, let me give you an idea. Looks like not much has happened, right? But the reality is, over the last 4 trading days this week, We've traded 890 to 860 6 different times in these four-day periods, and the day's not over yet because it's only 10 o'clock. You know, we could trade it 2 or 3 more times today. Who knows? I do think that this is short covering. I think it could propel us all the way up to 945 or 950, at which point that's where we're going to want to turn around and be hedgers or sellers. And likewise, if beans break and corn ends up lower, we're going to want to sell a move back below this 859 level down there. So there's your target, right? You want to sell it up here or you want to hedge it down here. But I think it's worth leaving it, letting it run just a little bit today because of the exuberance that this move has going for it. And if it does reverse and bounce off of this upper downtrend line, you know, it is what it is, and we'll graciously take 860, 870 for our week. All right, that's 15 minutes. I hope that's somewhat helpful for the end of the year, how we're viewing it. Again, as we finish this up at the 10 o'clock hour, corn is at 681. We'll see where it closes. If it's able to close a little lower at 677, you know, that would certainly be a bearish signal on its own right. But we'll see how it trades on Tuesday and Wednesday, and certainly by Thursday, Friday next week, we're going to know a lot about how fund managers are viewing the grain complex at the start of the year. So have a happy new year. Remember, a day does not make a trend. A day or two does not change the whole world. And I assure you that wherever corn goes from this spot right in here, we are going to be with it, long above it and short below it, with as much muster as we can come up with. So hope you guys have a great new year. We will talk to you next week.